Hi folks, I'm Bob Benny.
I'm Jessie Thompson.
And we're both certified financial planners with Bob Benny Wealth Management right here in Lincoln, Nebraska. Thank you for attending or listening to or watching our Bobcast. This is the topic of today's Bobcast is the big financial rocks to move in 2026. And last week we did another one about rocks. What was it called?
It was just the big rocks to move in 2026. And that one was broader. And that one was more about life. And so there was a physical, spiritual, mental, and financial aspect of those rocks to move. But we just wanted to hone in on the specific financial things. And these are the things that we think will be most impactful for your financial situation this year. And they might not apply to every single thing, might not apply to everybody. They're kind of in steps from beginner to maybe more advanced.
Right.
But a lot of them should apply to a lot of people.
So our first primary, number one, financial rock to move in 2026, our recommendation, our belief is to give to God first, surrender money to God first, pay yourself second. Give the first 10% of your income, that's called tithing, to your church, to charity. And that's what God's Word says, and that's what we do, and that's what we've experienced, and we've watched other people that do that be blessed financially for doing it. You don't do it so that you'll be blessed financially. We have been, other people are, but it does it we do it to help remember that all the money that we have comes from God anyway. It's all His money. And if we have our focus on giving Him the first 10%, besides the blessing that happens as a result of that, it also helps budget, kinda, because you're just living off the 90%. So you're giving 10% to God first.
Mm-hmm. The next thing is aggressively paying down any high interest debt. So when I say high interest, to get more specific, that would probably be somewhere in the ballpark of 8% or more. Before you have any business really investing or pursuing many other financial goals, you have to get that high interest debt off your back. That's why that's the number two thing. That's kind of at the bottom rung of the ladder.
Yeah, there's no reason to be saving money for retirement and then paying 20% interest on a credit card. Let's get that credit card out of the way first, and then we'll take care of that. Mm-hmm. So then number three is to save at least, this is after first giving 10% to your church or charity and helping that'll help you budget yourself, and then aggressively paying down high interest debt. Number three is to save at least 10% of your gross income for retirement. My experience has been, in 30 years of doing this, that people that started doing that relatively early, the math works out. If you start when you're in your 20s saving 10% of your income for retirement, you're probably going to be fine, because obviously you're budgeting a little bit and you're living below your means because you're saving 10%. And then it just works out math-wise, if it's invested properly, it works out math-wise that you're going to have a large enough retirement milk cow, we like to call it, at retirement to provide the milk in your retirement.
The fourth thing is, in regards to those retirement accounts, is taking control of them. So there's a number of things related to this. One, if you have old employer accounts like 401ks from a place you're not working anymore, you should, most likely it's in your best interest to move that into an IRA out of that plan. That gives you way more investment options, flexibility. It consolidates your accounts, brings it into your control, okay? Secondly, if you have a 401k or any kind of employer retirement plan that is active, make sure that you know what you're invested in, and don't just settle for the target funds that most of those plans will automatically put people in now. And we help people with that all the time, picking out what fund options are in their 401ks that best match what they are needing.
Anytime you see inside of a fund's name a year, like 2025, 2020, 2030, 35, 46, 45, they always end in a 0 or a 5, is what we're calling a target fund.
Yeah, thanks for clarifying. Sometimes they have the word target in the fund name, but they don't always. But if they have a year in it, you can bet it's a target fund.
And most likely, that's not how we would recommend that you have your money invested. And we can help you, and we can explain that to anybody that wants to give us a call or send us an email or whatever. But go ahead.
Next, make sure, we talked about trying to make it a goal that you are putting at least 10% towards your retirement, right? Well, in your work retirement account, if you have one, you need to make well sure that you are at least deferring whatever you need to in order to get your employer's match, because that is free money that you don't have to work for.
How much money do we give people when they give us money to invest for free money?
Nothing. We charge them.
Right. That's free money. It's crazy. You put 6% of your money in the 401k and say the company has a 50 cent on the dollar match, or better if you work for a government. Goodness sakes, that's free money. That's not going to happen with any
other type of account.
Yeah, so the bank, a financial guy, insurance company, nobody's going to give you free money.
Yep, make sure that you are at the very least, taking advantage of that. And lastly, if your employer doesn't offer a work retirement account, start your own. As long as you have earned income, you can contribute to an IRA or a Roth IRA, and we can help you figure out which one is best for you.
Right. Number 5 on the big financial rocks to move in 2026 is to get invested and stay invested in time-tested strategies. Don't try to chase the hot trend or the thing that they're talking about on the news or on social media to invest in, like GameStop or some kind of crazy stuff like that, or Bitcoin or whatever, stuff you don't understand. Don't chase the hot stock, the hot trend, or even usually for most of you, any individual companies, unless you really know what you're doing, like a company you're working for or you know what you're doing. Instead, commit to staying invested regardless of what happens in the stock market, particularly what happens in the news. Whatever the news tells you to do, from a financial and a life standpoint, you probably ought to do the opposite, because they're liars and they don't know what they're talking about. So it always is more important your time in the market, not in timing the market. You try to time the market, what usually happens when people try to time the market is they end up buying high or selling low, which is the opposite of what you want to do.
Yep. And so the 6th thing is figuring out what your actual living expenses are. Now, if you're doing the first 3 things on this list, if you're tithing, if you've worked on paying down debt, and if you are saving at least 10% of your gross income, you've probably already kind of got this figured out. But this is really important, especially if you are like within 10 years of retirement, for retirement income planning. And you need to just kind of get a hold of that in your head of, okay, well, how much does it actually cost me to live? How much am I going to need to be comfortable in retirement, so that you can start, the further ahead that you can get, the better. But it's an important thing to work out and make sure that you have a hold of.
Yeah, and this is one of the things that we do when we meet with prospects and clients, is help them figure out, what they're going to need, and then what they're going to get from pensions, Social Security, and how much milk they're going to have to take out of their what I'm calling a retirement milk cow, their retirement nest egg, and their other money to live on. So number 7 of the big financial rocks to move in 2026 is to make sure that you have an estate plan and beneficiary arrangements, so that your money goes to who you want, how you want, when you want, and it doesn't unnecessarily go to probate lawyers or to the government. And so those are the
I'm
7.
Gonna review them since we talked about 7. Okay, so the first one is making it a goal to tithe at least 10% of your gross income, the first of your income. Second, aggressively paying down any high interest debt. Third, setting a goal to save at least 10% of your income towards your retirement. 4, taking control of your retirement accounts in the different ways that we discussed. 5, getting invested and staying invested, committing to staying invested in time-tested strategies. 6, figuring out what your actual living expenses are and kind of coming up with sort of a budget. And 7, having an estate plan, making sure your beneficiaries are the way that you want them to be.
So thank you very much for attending today's Bobcast. If you have any questions of us, you can call our office or email us at bob@bobbenny.com or jesse@bobbenny.com. We also would like you to like and subscribe on whatever it is you're watching it on, if you're watching on the YouTube, right?
Yep.
Is that what I was supposed to say? Okay, yeah. Anyway, thank you very much and have a blessed day.
Thank you.